All right, how's it going, guys? Welcome back. This is Brocco with Uncharted Territory. Got another post-market recap video for you guys today. This one might be a little longer than usual because I do have a few key points I do want to touch on from today. I think there was a couple good lessons in the price action and how things set up. As far as stuff goes for next week, we're going to talk all about that in Sunday Scans, which is a free newsletter that we post every Sunday on Substack. If you don't follow us on Substack, I highly recommend you go check it out. Sunday Scans is full of some awesome content. We talk about market health, market breadth, some headlines from last week, a full scan of indexes, ETFs, notable stocks in play, and kind of what we're looking at going into next week. So today in this video, we're just going to focus on today's action. Some of the better opportunities, some of the standouts, especially now that we're seeing how some things are closing on the day. So, kind of a mean reversion day in the market. We had a pretty nasty gap down coming into the day. We were gapping down about 2% on QQQ in the pre-market, and it was a little uglier in some of the underlying names, the same names that have been selling off for the last few weeks that were, kind of that high beta momentum retail crowded basket was just getting crushed again this morning. And yesterday we kind of saw our first maybe little sign of some capitulation in some of those names. Nasdaq was down 2%, close to 2%. Yeah, about 2% yesterday, which definitely did not help. But we had the big gap down today, and I don't know if anybody who's listening now tuned into our pre-market stream this morning that we did live on Twitter and YouTube from 9 a.m. to market open. But, we talked about potential mean reversion in play today. Way too late to try to initiate any sort of short positions. We had a 2% down day on the Nasdaq yesterday, followed by another 2% gap down today, which equaled 20-30% moves in some of the other individual names. So way too late to initiate any shorts today, but definitely know there were some people who whether on tilt or didn't do their studying, definitely tried to chase the shorts today, which probably fueled some of the move. That's usually always the case, but you had a classic mean reversion setup today. I wouldn't call it a 5-star mean reversion, more of like a 3.54 star. It was a little bit tough to get a read on. I was sitting here for a while in pre-market building out a focus list, and it's tough on these days because I saw the setup. It's tough on a Friday because I have seen many really 5-star mean reversions in the past come from Thursday, Friday weakness into a capitulation event on Monday. So I definitely was keeping an open mind to that. And I didn't want to get too excited and really press it too hard today in case the market was going to give us that into Monday. But, the nice thing about, studying mean reversions, if you do like to trade these, is that if you've studied your models and reviewed tons of previous examples and have a database filled with some of these annotated and reviewed deeply, what setups to look for. And all you need is a setup. You just need an entry and an area to risk off of, and the market will take care of the rest, right? So you don't really need to know how much we're going to rebound today, whether we're going to go green or exceed that like we did today. All you need is your entry and your stop, which was provided today. If anybody has looked at any of my past mean reversion posts on, on Twitter or Discord or anything, I often talk about this VWAP reclaim opportunity, which is one of the best and most common mean reversion setups that I've seen throughout my studies. It's my personal favorite. What you get when that sets up is obviously a significant gap down into mean reversion territory, which we were today. Couple just really basic, if you're just looking at a daily chart of the QQQ, couple really basic things, you're looking at in the pre-market. First of all, the $600 psych level is right around where we were opening today. That's where we supported last Friday. And you also had us potentially undercutting last Friday's low and reclaiming. That was like the one obvious pivot to trade off of today was last Friday's low. If we didn't have that low there, it might have been a little bit trickier today because you don't really have a clear area on the chart to look back and trade off of. But this was really recent, which made that put that in play today. And what you get on these VWAP reclaim setups is basically a flush out at the open, whether that's just sell orders ready to hit the tape at open, or any shorts initiating any short positions on the opening range lows, which there surely was. Anybody just kind of puking out of any positions right at market open that they just didn't even want to look at anymore in their portfolio. Whatever the case may be, you get this flush out at the open and then some sort of a reversal, right? I've seen these sell-offs at the open last 30 minutes to an hour. I like the ones personally that last 15 to 30 minutes. This one was a little bit shorter today, but the setup was still there. So you get the opening range lows breakdown and then some sort of reversal off the lows and a reclaim of the VWAP. And I like to initiate longs on the VWAP reclaim. That's like my favorite spot to take it. It also usually coincides, especially a quick one at the open like this, with a failed opening range breakdown. So if you look at a 2-minute chart, we broke the opening range lows and then couldn't go lower after that and quickly reclaim the VWAP. So with a mean reversion day, you're typically going to have a lot of range on the day, right? And what I like to target on a mean reversion day is the OOPS pivot, the OOPS reversal pivot, which is the previous day's low. So if we gap down below previous day's low, your first target is going to be the previous day's low, which was 60608. And then the next target, which commonly see on good mean reversion setups, is the gap fill. So the yesterday's close. I usually like to look for the gap fill. That's usually the most obvious target, and I've seen it get hit pretty often on these kind of setups. But you basically take an entry on the VWAP reclaim and throw your stop at the lows of the day. Size for whatever that risk may be, but that's how I like to trade it. You can also, if it's a really, really good mean reversion setup, you can also aggressively look to add on the opening range highs as well, and maybe trail your stop up a little bit. This is one, kind of entry tactic I've used in the past a couple times. Most recently on April 7th when the market capitulated, we had this pretty much exact same setup where we sold off at the open, we turned, we reclaimed the VWAP and broke the opening range highs. I was involved a little bit in pre-market already on April 7th. Because it was, such a slam dunk kind of 5-star parabolic long. But I also added through the VWAP and I added through the opening range highs. And then I sort of trailed my stop up from there. The move was the intraday price action after that was much different on April 7th. Volatility was so high and we had some news come out and stuff like that. So a little bit different from today, but the entry tactic and the stop remains the same. And then from there, we kind of just trended up. And, it's important to know that on days like these, if you are getting involved and you want to trade the mean reversion, it's so important to get that early entry, in my opinion, on like a VWAP reclaim or an opening range high break. Because after you get that first opening initial move, you tend to see a little bit of volatility. And I have tons of recent examples I could share. It would take some time, but of this exact setup where you get a mean reversion pop at the open and then some sort of range that builds out for 15, 20, 30 minutes where you kind of chop around and just consolidate pretty much like we did. And if you get too late of an entry, it can be really easy to get shaken out in here because these are some wide pullbacks. I mean, that's a 0.5% just there in a couple candles. So it is really important to, make sure you're managing an idea or a trade like this from a position of strength. Which would be down here. You give yourself a lot of wiggle room to kind of let the market do its thing. And figure out, kind of what it wants to do next. So, right here, you pretty much have that decision point, right? It's like, okay, yesterday we kind of popped up and had the VWAP reclaim, pushed into the highs, and we failed and came back and made new lows. And, participants in this market or in any market, have really strong recency bias. And I'm sure a lot of people remember that yesterday. So right around here, it's kind of like, okay, are we going to roll over? Is that all the pop we're getting today? Are we going to continue? It's sort of like a battle until one side, kind of wins. And then you finally get your range break there and we go red to green on the day and hit that gap fill target. So if you did take that VWAP reclaim, you got about like a 4R trade to the gap fill spot, risking, I think, like 0.4, 0.5% to low a day. Yeah, a little less, 0.35%. For about a 1.5% move to the gap fill. And then, if you caught the whole move, about a 6R trade to the highs of the day. So really solid opportunity there. Once you get that previous low test here, your first target, that's like the OOPS pivot, right? And then the next target's your gap fill. And of course, after we reclaim yesterday's low, it was pretty smooth price action from there until high a day. Just a nice trend day. So really nice there. I fumbled today, and I'll get into that in a second. I was looking for the mean reversion today. I was happy to get involved. I was keeping an open mind to potential, more quality mean reversion Monday if we close weak today, which I thought was a possibility. You don't know, right? But, some of the ideas I had on my focus list and pre-market right here, individual names I had BE, Oracle, IONQ, and then PLTR, Tesla Hood as some liquid leader kind of names to watch. BE, ORCL, and IONQ were kind of my top three. BE, first of all, this thing was one of the stronger names in recent weeks, despite a lot of its peers and just other areas of the momentum market just getting, demolished from the middle of October. But this recently only started seeing some selling pressure about 3 days ago. So it's already one of those kind of price action leaders. It had a really nasty down day yesterday. It was down 18.5% on some capitulatory volume, traded just over 30 million shares. Came right into this $100 psych level in the 50-day moving average. Really clear pivots to kind of trade off of. And it was gapping down below yesterday's low today. Reclaim of the 50-day, reclaim of $100 and yesterday's low. That's kind of your big area to watch. Something that has multiple spots of confluence on a gap down mean reversion setup like this is really nice. Not to mention this thing has a super high ADR, about 12% average daily range over the last 20 days, which is really significant. It's liquid for anybody, any of our size accounts. So this was a really great opportunity today. One little subtle thing you can look at too at the open, especially if you're watching a few names, right? The QQQ and SPY broke their opening lows. So they broke their 2-minute opening range lows to the downside, while BE actually did not. It traded inside on the second 2-minute candle and then went inside and up, which is a sign of just relative strength right at the open, right above VWAP. So that was really nice. You could have taken the opening range highs on this and caught a really nice move. This thing made about a 27% move off low a day. So really notable there. The other one I was looking at this morning that I talked about on pre-market stream was Oracle. Not typically a name I would usually trade. This thing obviously has been very weak the last couple weeks, very steep kind of downtrend. This climaxed on its earnings report up at the highs on a lot of volume. And, there's been a lot of talk around this name recently, negative commentary. And this morning, I had to have seen probably 10 posts on the credit default swap soaring to 2-year highs, and everybody talking about, just pretty negatively on Oracle this morning. And, typically stocks top on good news and they bottom on bad news. So the best mean reversions, not even just on stocks, but market wide, are typically going to have some really negative news tied to them. On April 7th, for example, this year when the market bottomed, I kept a little journal of like all the headlines that came out in that 24 hours. And it was probably the worst day of like headlines, news, and commentary I've seen probably since like some parts of 2022. So I was kind of looking for any names with some like negative commentary around them this morning. And Oracle seemed like, kind of, one of those names. MSTR as well, with the rumors that, Saylor was selling some of his assets this morning, which came out as false. But yeah, with that, kind of little narrative going around this morning and everyone, kind of talking shit on Oracle, I figured this was going to be a pretty decent bounce candidate today, especially considering, it kind of started to get a little steeper the last couple of days, down 3 days in a row and gapping down into the 200-day moving average. I was watching this one at the open. It was really choppy, and I really didn't like that. So for that reason, I really didn't initiate anything on it. It is one of those names that's maybe not going to move like a BE or like an index. So, it can be a little bit trickier there. So, for that reason, when this came and pulled back below the VWAP as the market was pushing higher, I personally did not like that. No matter what I think, whether, I think this is going to bounce because of the commentary and the location it's at, right? Market is always right? The price is always right. So, it was tough to argue with that intraday there, and I didn't end up pulling the trigger, but this made a nice move and actually ended up engulfing the previous day. So really nice move on Oracle there. IONQ was another name I brought up in the pre-market stream. This was, just one of those, high ADR liquid names that you can look to trade with a lot of range. And, my thought process was, with quantums, obviously being like the main group that, triggered this momentum blow off back in October. This thing was down about 50% off its highs at the close yesterday, down 4 days in a row, and it was gapping down into the 200-day moving average. So that rubber band was really stretched on this, as well as like RGTI and QUBT and stuff like that. And I just thought, put myself in the shoes of a market participant who was involved in this long or short. And you got to think, if anybody was short this, if they're smart, they're going to be looking to cover their shorts at open today, because you do have a potential market-wide mean reversion. And if it's a market-wide mean reversion and the indexes are going to bounce back, a rising tide usually lifts all boats. So most stocks are going to go up with them. And, if I was short quantum, I'd be looking to cover pretty quickly today on the gap down. And if you're, a stupid short and you're not looking to cover today, then you're probably going to be forced to cover. And I'm mostly talking about like, weak hand short sellers who initiated short too late and weren't involved from up here at $70, $80, or maybe even 60. So with all that, and then as well, it was undercutting the top of this kind of base structure today. A lot of previous demand here and volume traded. Just a really logical area to find some support. So this also showed RS versus the indexes and did not break the 2-minute low. Broke the opening range highs as QQQ was at low a day. Another notable sign of RS, so this made about a 14% move, so another nice opportunity there. Soxel was an ETF idea I had, which we talked about in the pre-market as well. This is like your most classic kind of go-to mean reversion vehicle. Mainly because when the market is like, selling off hard and capitulating, we often say don't be a stock picker in those times, because when you have a really good mean reversion setup, you typically don't want to be a stock picker. What happens if you end up picking like a core weave and it doesn't make a good move and it comes back and breaks the lows, or like an MBIS, that came all the way back down pretty fast. It's tough to pick those good stocks that are going to end up outperforming or moving with the market. But Soxel is just like, it's one of those names. It's an ETF. It's the 3X bullish ETF for semiconductors, right? Semiconductors, if tech bounces and QQQ bounces, semis are going to as well. And if you've studied previous mean reversions, whether it be to the upside or the downside, semis are usually the biggest movers, especially when it's a mean reversion long. Semis bounce very hard typically. I mean, you saw NVIDIA almost got all the way back to yesterday's high. Huge bounce. So Soxel is typically like a big go-to. It's super liquid. And, this thing made a massive move, about 16% from low a day. This thing was super strong. Semis were like really, really notable as they took out the opening range highs, were much, much more strong than the QQQ and the S&P. So Soxel was a really nice move. It was kind of undercutting the bottom of this base a little bit at the open. So this was another idea I had today. And the final idea I had was ETHU and this crypto idea. So, with some of the commentary around, MSTR and Michael Saylor, I don't know if anybody who is watching didn't see, but there was tons of commentary this morning on Michael Saylor potentially selling some Bitcoin assets. And there was just a lot of, FUD going around. Saylor came on CNBC before market open and said those rumors were false and that they were actually accelerating their purchases. And, with MSTR, selling off and getting really steep on this last leg here, what I thought, and gapping down below $200 psych level, I thought that this could reclaim 200 today. And with kind of all that negative commentary and sentiment around crypto, that we could see like a capitulatory event in crypto today. And I really liked Ethereum because it was showing some really nice relative strength versus Bitcoin. Ethereum ETHA had not broken its 11.4 low yet, while IBIT was, is significantly below that 11.7 low. So I really like that relative strength on it. And I thought if MSTR and Bitcoin capitulated today, that these could have a really big mean reversion with the market, and that ETHA or ETHU could be a good proxy for that. Unfortunately, I was completely wrong, and this was actually like the one name that I decided to focus on at the open. Don't ask me why. I've had some good trades on Ethereum in the past, and I think I used that recency bias into today. And I bought this somewhere around here around the red to green spot, and it made a nice little move. But, ETHU on a real mean reversion, if it, was going with the market, should have made a 25% move like minimum today, and just didn't get that bounce. Crypto had a heavy tape all day. Bitcoin had a little bit of a move, but it actually came all the way back to and broke the lows of the day at one point about an hour ago. So that was not nice to see. I ended up stopping out of it just because I have no cushion to carry into the weekend. I stopped out of it just under break even, and in crypto, just I don't like the relative weakness versus the indexes, and not something I'm looking to carry into the weekend, especially considering that we're still below the 9 and 20 on the indexes, and we are definitely not out of the woods. This is not like an April 7th moment where we had a prolonged correction and the last leg of the move. This is like, just a oversold bounce for the short term, and, who knows what's going to happen next. So, anything with, without a cushion for me does not deserve to be held over into the weekend. So I had to sell that, and I went back to cash. And I obviously really wish I would have went with some of my other ideas, like a Soxel or something like that, is like a classic name I've traded on mean reversions in the past, like August 5th last year, when this capitulated during that yen carry trade correction. I had a huge trade on this. I went really, really aggressive on this. And so I wish I would have maybe went with this today instead of ETHU. So, I got a lot of study and review to do tonight to kind of figure out, what happened there and, what mistakes I made or misjudgments. So, that was unfortunate, but it happens, right? You're not going to nail them all. That's just the way it goes. I think one of the other reasons why, I kind of failed to capitalize on this today, which these mean reversions are like my bread and butter. I really like these setups, really strong risk reward. And I've studied the entries a lot, and, exactly what I explained to look for in the pre-market end up playing out, which was that sell off at the open and the VWAP reclaim. And I think one of the big issues today was that for the last 2 weeks, my trading has been pretty light. I think I took 2 trades this week that were really, really small. I haven't been able to get much traction lately in the market. So I've been taking things really slow. I've spent 7 out of the last 8 days just in 100% cash and not doing much. And, I think when you have a week or 2 weeks like that where you're not doing much, it can be hard to get back involved on a setup like this, maybe on a micro time frame where you need to be really focused, right? Call it gun shy or trigger shy, whatever you want to call it. But when we did start reclaiming that VWAP, I was a little hesitant to buy stuff. I'm not sure why. I think it was just that lack of activity in the market and me just being used to kind of sitting cash and watching things happen from the sidelines. So I think that caused some hesitation today. And I definitely could have capitalized a little better because these were some great opportunities, especially when you consider the opportunity set the last week or two has been, pretty dry. This was one of the better straightforward opportunities today in the last week or two, in my opinion. And definitely wasn't as ready as I needed to be. I think one fix there could be just maybe taking some more really small trades that aren't going to move the account much, but keep me involved in the market, keep me kind of making contact with some things and just having a feel for the tape, right? So yeah, that was my day today. And market's closing pretty much flat. So, going to be tough to get a read into next week. I'm going to have to do a deeper scan tonight and kind of see what's going on. Some other notable movers today, SNDK and MU are really strong at the open. Obviously strongest theme in the market. Gap down, right near rising, 10-day, whatever today. These were really strong. Another kind of notable area that was really interesting and that I'm going to dive a little bit deeper into tonight were some of those names that reported earnings in the last 48 hours. ONDS was one of them. This reported earnings yesterday, and it was up about 19%, with the NASDAQ down 2%. And this gap down just below the earnings low from yesterday and reclaims right at the open and ended up making a 28% move. Really big volume the last 2 days. And I thought that was interesting, especially when you pair it with CSIQ. Which is another one that was green yesterday on earnings despite the NASDAQ down 2%. And it actually also undercut the earnings low and reclaimed right at the open and had a 29-30% move intraday. So a little bit of a theme there with some of those recent earnings moves that showed relative strength yesterday. Maybe because, those sort of have a fuel, like a fresh fuel or a reason to move, right? Which attracts maybe more participants to these names on a day like today. AMAT was another one that had earnings in pre-market today, or in after hours yesterday, and was actually gapping down 9%, which is pretty large for this name, and recovered the entire move in the first hour and a half of the day. Another earnings name, QUBT, also not as notable, but had earnings in the pre-market this morning and was down and actually was just really strong right out of the gate today, right at that $10 psych level in this bullish gap from back here. This helped add kind of to the conviction on the IO and Q idea that I had in pre-market. So yeah, that was my day today. That's what I was looking at. Some people in the group, had some awesome trades on the Muner version today. I unfortunately fumbled it, which isn't usual for me on these kind of setups. So definitely have some reviewing to do. But yeah, going to be interesting into next week. Definitely not out of the woods yet. VIX is still closing up about 1%, I believe, on the day. Still green, still above yesterday's close. This actually also helped add some conviction. I think we mentioned this in the pre-market about how VIX was gapping up into this 22 area, which, besides this October dip, has been pretty much the area that each VIX spike has peaked at since May. Each kind of, volatility spike we've had has kind of stopped around 22. We had a couple pokes over, but never were able to sustain above it besides this April spot. So this was a nice area on the VIX and some of those vol products for, potential just a tradable low today. So yeah, that's my thoughts on that Muner version kind of setup today and some of the price action we saw. And I'm excited for next week. hopefully we keep getting some good opportunities and some things set up soon. But we kind of got this like double bottom action on QQQ at around 600. Imagine we need to build out a little bit. I don't like the crypto weakness still. That's not nice to see. It'll be interesting to see how Bitcoin and Ethereum trade over the weekend into futures open on Sunday. But pretty slow week for me. Ethereum was around break even. Couple trades I took yesterday, really small at the open, ended up stopping out, and so small loss in the week for me. Pretty much basically flat. Not trading anything of significant size right now until I can, get a few trades under my belt and, establish a little bit of a cushion on my equity curve, if you want to call it that. So, yeah, thank you guys for tuning in. I hope I at least provided some value today. Might have a post up tonight on some Universion stuff on my Twitter. I'm not sure. After I do some review, I'll see. So, we'll see you guys next week. We'll have live streams up again in the pre-market. We'll have Sunday scans posted on our Substack on Sunday. And yeah, have a good weekend.